What do you think of when you hear the word condominium? I think of the stacked squares from Hollywood Squares, with lights, stairways, and neighbors living just a wall away. Maybe a little less game show excitement, but for many homebuyers, condos are a real opportunity. Today, condominiums are one of the most important options for buyers trying to deal with high home prices and higher interest rates. For many people, a condo can be the difference between continuing to rent and finally becoming a homeowner. That is why these new mortgage financing rule changes for condominium purchases matter so much. According to Fannie Mae Lender Letter LL-2026-03, dated March 18, 2026, there are several important updates that homebuyers and realtors need to understand. First, the limited review condominium approval process is being eliminated. This means many condominium associations, especially larger projects with more than 10 units, may now need a more detailed review before financing can move forward. Second, for smaller condominium projects with 10 units or less, there may be more flexibility through a waiver of project review, as long as the project is not considered unavailable and it meets insurance requirements. That makes insurance more important than ever. Third, reserve requirements are increasing. Many people are used to seeing 10% of HOA dues going toward reserves, but now that number is increasing to 15%. The goal is to help improve the financial strength and long-term stability of condominium associations. Fourth, insurance requirements are also changing. Replacement coverage remains important for most hazards, but there is now some flexibility regarding roof coverage, where actual cash value may be allowed in certain situations. Associations are trying to balance proper coverage with the rising cost of HOA dues. Fifth, the investor concentration limit in established projects is being eliminated. In the past, projects could run into financing issues if too many units were owned by investors instead of occupants. This change may open the door for more buyers to purchase in projects that were previously more difficult to finance. These are important changes, and they will affect both buyers and realtors. In high-cost markets, I work with many clients who rely on condominiums as an affordable path to homeownership. I have over 30 years of mortgage lending experience, more than 10 years of underwriting experience, and over $1 billion in funded mortgage loans. I have reviewed countless HOA budgets, insurance documents, and project certifications, and I use that experience to help my clients succeed. I also have access to Fannie Mae, Freddie Mac, FHA, and VA condominium resources and databases, and I can help identify which projects may be viable for financing. If you are a homebuyer considering a condominium, or a realtor wanting to make sure your condo transaction has the best chance of closing successfully, let's connect. I'm Mitch Milat with Riviera Financial Partners. You can reach me at 661-810-3362 or by email at mitch@rivierafinancial.com. I'd be happy to help.
Thank you for watching my video. I hope you found it helpful, and I hope you would like to discuss it further. So if you would,